Traders, what's up? Dane, Market Scalper D. Like and subscribe, by the way. If you want to learn more about making money with options, whether or not you just trade shares or you're learning options or you're an options player, man, I'm going to be putting out all kind of videos on little techniques you can do to just better yourself as a trader. As I myself am always trying to become better, right? Every day, if I screw up, have a bad injury, whatever I can do, I try to be better the next day. And I think that's what we can all do so we can all be consistent. Because everyone's right and everyone's wrong no matter what side of the trade you get on. Like I woke up in the middle of the night, placed a trade that expired today. And very rarely am I bullish the last year. But you can see right here, basically that contract went from 1,400 investment to 1,800. Mine 2x. I went right back to bed. I remember falling asleep right here back at 3:30. Like, oh, well, at least I 2x my money. No big deal. And, now I can sleep in and then wake up and have coffee whenever I want, man. That's the beauty of being a trader, is that, you can make money with SPX and stay liquid, man, while everyone's trapped in chains. You can see right here where they're building into it, right? Whether or not this is the other markets in Asia affecting it, either way, we got oversold. The one hedge fund got blown up in the market, so there's just all kind of fear in the market, and a lot of players would have probably went really short, man, on the FOMC meeting. A lot of them got trapped, and you could see, I wish I held this position that expired today because it went, I think it was about 10x. So you can see even this position tonight was selling for $7,800 at $9.25 tonight. You could have been done for the month with only a measly one contract, right? Imagine the guys that are trading with 20 contracts today, right? Man, they're paying off half their house, right? Imagine the big players, man, who are a millionaire, right? That went big knowing that we were going to get a bounce. We had the tech earnings. There was a lot of cues out there to expect it. Even me decided to go bullish. The problem is when I see 2x my money and I'm half asleep, I go right back to bed. But let's check out the video. It's all about right here, man. All these players from here to here, that's the only shot they had to get out. They just floated this thing, man. They just floated it. Look at the percentages, right? They're all basically just floating the price, margin calls, all kind of players got short and now are getting blown out, especially if they're like really large positions. A lot of these traders working for hedge funds, man, had to cover, right? So they're all just covering, price is floating. And then really what this is on the 0 DTEs, this just completely burned all the shorts out today, slowly. I mean, we're talking a slow burn of theta, because when the price stagnates right here to here, everyone just got completely wrecked. There wasn't a single person that made it out bearish today alive, except for right here. And even then, you would have had to been swing trading a position. But that brings me to this idea that I had, not financial advice, because I'm a high risk to reward trader. I've had $100,000 days in the market, and I am trying to be consistent and build the edge that I've always wanted by following price, right? Always looking for who got screwed and how can I take advantage of it, right? Let's look at this 7,200 level, right? Expiring August 31st. Even if you chipped away at this and average into it, if they decide to drop the hammer, and let me tell you why, if you go right here, you can see it's not a coincidence. This contract on June 4th was basically $9,900, right? Not a coincidence right here that it's extremely close to those numbers on June 18th, right? Not a coincidence here on June 10th, 6,700, right? On June 15th, 4,900, right? So they try to keep these things balanced, right? And that's how you build a lot of edge in the market, is by looking at what point do these players that write the option not want these coming back in the money, right? They don't want to be on the hook for dealing with all that headache from trying to leverage their positions by having to buy the shares, right? But let's look at the video. Title is going to basically be how to build a swing trade in the market. You can see right here the 7,200 strike. If the S&P 500 drops, that initial investment tonight, right now is at 9:30 o'clock, 4,600 is now 4,800, right? I mean, you could have just made some money right now and be in and out. Make your $300 and get ready to go to bed, right? But this is what I'm looking at, right? This contract today at 4 o'clock in the morning was 9,000. There's going to be a fight coming. And at what point do we get the fight, right? I'm thinking at some point they're going to trap all these players as much as they can again, back up at these all-time highs that we're at again. Once this level breaks, it's going to be pre-market or after hours. They're going to catch everyone off guard and then trap as many people as they can. Once it breaks the 7,400 level or the 7,200 level right here, the next big fight's going to be this 7,000 mark. You can see right here where all the big money rolled in. 7,000 is the magic number. Man, if those contracts go in the money and you're giving yourself a month or two to be right, this is what kind of gains you can expect to make on big positions like this. But let's just choose and not financial advice, right? Just a retail trader, man. A guy who likes to take advantage of volatility. And I'm always expecting the I gotcha, because I don't think the market's rigged, but it damn sure looks like it if you start following the price of options, right? Either that or there's just big players. So you can see right here, follow the money, right? At what side can you expect to either, whether or not you're leveraging with shares or options, this can help you pinpoint exactly what point is someone about to get screwed, right? Trap everyone and then boop, right? So it really just depends on at what point are you about to get out leveraged and how much money can this make you as the price falls in the money and then cracks 7,000, right? You're talking almost 11 grand. And this is way before this thing expires, which I always say average out of the position as you're going in the money. Even if you might have another chance to jump back in that same trade, then do it. Just keep one contract going for a few weeks and then start leveraging around that one contract on both sides. So as you're expecting the I gotcha, flip it to a bullish position and then make money that you're losing on one contract and just keep leveraging a long-term swing trade. But you can see right here, if we crack that 7,000 level, it's going to be game on, man. I mean, at this point, you're talking, right here at the 7,000 level, that's the magic number, man. If we crack that 7,266, big money will be made, and I will certainly be hopefully averaging into a position as I can afford it. But again, it's all going to be about patience, right? As the market right now, you can see you're down $45 had you entered by the time we just added this contract, right? But at what point does it get all the way back to $6 grand, right? So that's the name of the game. And at what point does it come back to 8,000, right? At what point is this contract possibly going to make it back during the FOMC hike and pump and dump, right? The 10 grand. So yeah, a lot of money to be made in the markets, man. You guys stay green, run a nice tight stop loss, but always give yourself enough room to let that trade breathe so you can come out on the right side of the trade. You guys take care.